Hey guys, welcome back to the channel. Today we're going to be talking about auto insurance, if you should cancel it during these crazy economic times. As we all know, the state of the market recently has been pretty crazy, and it's just growing and growing in uncertainty with what's going to happen in the coming months with this coronavirus crisis. And a lot of people who have been hit hard are looking into ways to reduce their monthly expenses to save a little bit of money, especially in those industries that have been hit hard, and we've seen mass layoffs and furloughs. A recent survey showed that almost half of all Americans are living paycheck to paycheck with no emergency fund to help them weather any economic uncertainties. Recent unemployment numbers are showing that more than 6 million people filed for unemployment just in mid-March. Now, what does that mean for an average household working in an impacted industry? Less money is coming in, but some of the same expenses remain. For example, rents, mortgage payments, utilities, insurance payments. Even though qualifying individuals may receive up to $1,200 in the stimulus check, reports have shown that it may take as long as 2 months for those checks to actually get mailed out to you if you're not doing direct deposit. So if you're not getting that money anytime soon and have a lot of bills and expenses built up that you need to pay, naturally, a lot of people are going to be forced to make some tough decisions regarding their budgets. One area people often overlook but may think about cutting is insurance. Although some insurance companies such as Allstate have said that they are going to return some premiums to their policyholders during these couple of months due to the savings with less driving, less accidents. This isn't happening on a large scale across the board. And also, you might not be in a position to receive significant savings from this. Now, before I jump into the video, I just want to say that insurance laws vary widely from state to state. I'm not your insurance agent or financial advisor. Consider just using the points in this video as a guide for something to think about, something to bring up in discussions with your insurance carrier or your agent before making any changes to your policy. I also try to avoid giving out numerical examples when comparing policy changes, just because insurance policies are rated on a wide variety of factors, including your driving profile, your location, what type of car you have. So if I say that I'm saving $100 from doing this to my policy, that's going to mean nothing to you because we're different people. There might be a savings still, but I don't want to give you a number in your head that you're going to think, if I do this, I'll save $100. That's just not the case. These things vary widely on a case-by-case basis. So today we'll be talking about car insurance in particular, since a lot of people are now unemployed or forced to work from home. We're all staying inside due to government and local orders. You may be thinking that it's a good idea to cancel your car insurance because you're not driving as much as you would be if you were going to work every day commuting or just driving around on the weekends for leisure and travel. For most people, I don't think it's a good idea to straight out cancel your insurance unless you're actually no longer using the car. If you're selling it, it's not yours anymore, you're not using it. What I will do is walk you through some options that you can look into or consider discussing with your agent to see if you can save some money. Right off the bat, let's address this idea of canceling your insurance outright. One reason that this may not be a good idea is that canceling insurance will create a lapse in which you're not insured. This may impact your future rates, as insurance companies will often ask you if you've been continuously insured, and those with coverage lapses may be considered higher risk. You will be paying more premium once you get your insurance back in place. Additionally, many of these states have financial responsibility laws which require you to prove that you can pay for any damages in the event of an accident. This requirement is most often met through buying insurance, but here's a fun fact. In some states, you can actually meet these requirements by posting collateral to the state through a bond or giving them money to ensure that you can meet the requirements. Some states also require you to carry insurance on any registered vehicle. So if this car is owned by you and registered, you still have to get insurance on it. Lastly, if you lease your car, a lot of these loan agreements will also require you to carry insurance on your car, so you might not be able to cancel your policy outright. Before we move on, I just want to talk about another point of having insurance. The premise of it, most people will never need it, but when you do really appreciate that this is something you have. Regardless of state-imposed fines or regulations, if you cancel your insurance but you still use your car, you can expose yourself and your assets to a lot of liability. If you still use your car once every 2 weeks to get groceries, you're still using your car, there still could be a chance of an accident, and if it does happen, you're on the hook for it. Accidents aside, physical damage auto insurance also covers your car when you're at home. Usually your homeowner's or renter's insurance policy will not cover damage to your car. If something's stolen out of the car, that property may be covered, but any physical damage to the car, if it's stolen or broken into, if it's bumped into, might not be covered. Once again, this will vary on a case-by-case basis depending on what policy you have. But generally speaking, physical damage to your car won't be covered under a homeowner's policy. So now you're probably thinking, great, I can't cancel my policy. Is there anything else I can do? There are a couple things that you could consider to save some money or to help you out in the short term. The first thing is suspending coverage. This is a little bit different than canceling your policy outright. This option may or may not be available depending on your situation and where you live. So please consult with your insurance resources and only do this if you're absolutely not going to be using your car, not even for an occasional grocery run, to go to the park, to exercise. No car uses whatsoever. This is similar to canceling coverage, but a suspension will ensure that you don't have to pay premium and you won't have to report it as a policy lapse in coverage when you shop around for coverage in the future. The second thing you can look to do is to move on to a payment plan or to defer payment. A lot of insurance companies recognize the financial impact that this event has had and are offering some sorts of restructuring to your payment to offer relief for those who can't get money in right away. Please consult with your agent once again or your insurance carrier to see what options are available to you. But I do want to stress, please be proactive and do this ahead of time. If you know this will be an issue, reach out to your agent, reach out to your insurance company before this comes an issue, before the bills come in, you're late, they're going to cancel your policy, and then you have to scramble to explain why you can't pay. Get ahead of it and reach out and see if there's anything that they can help you out with. The third thing you could do is modify your coverage. Now, car insurance typically comprises of two main types, and different states will have different requirements and minimum limits that you have to carry. But the first type, liability coverage, the bodily injury, property damage from others, uninsured or underinsured motorist coverage, and the second type, vehicle level coverage, collision if your vehicle strikes an object or is overturned, and comprehensive, anything other than collision. These last two will usually carry a deductible with it as well. In terms of liability coverage, changing your limits, this would mostly apply if you're carrying high limits to begin with, over $100,000. If you think you're driving a lot less and your exposure has been reduced because you think you might not need such high limits because you're driving less, you could consider changing them. But traditionally, liability coverage is the cheaper of these two, and changing your limits from $100,000 to the state minimum may not guarantee a lot of savings. And also, you can only go as low as your state will let you. There are state minimums. This might not be the best way to save money. But the second part of it, the vehicle level coverage, the collision and comprehensive, is where most of the savings will come from if this is something you're looking at. Here, instead of reducing your limits, you could choose to just take this coverage out completely or to increase your deductible. Now, if you currently don't have this coverage, or you do with a pretty high deductible, $1,000 or higher, raising that even more may not save as much money for you, and the only other option would to just be taken away completely. However, be very careful if you choose to remove the vehicle level coverage. As I mentioned earlier, if your car is damaged, even if it's parked at your garage or on the side of a street, you won't get covered for money to go fix that car since you don't have that coverage. You can get very cheap insurance without this coverage and having state minimum liability limits, but please consider what you're actually buying. But you have to think if this is the right decision for you. Is the cost benefit worth it? Saving that extra money per month, but on the other hand, completely gutting your insurance policy down to the bones, not giving you much. So definitely talk this over with your agent and see if this is something that you could consider. Once again, these requirements can be restricted by loan or lease agreements with a lender, so check those agreements, and if you're required to carry both types of coverage, then there's not much you can do here. And the last option you can have is to just go shopping With the rise of pay-per-mile car insurance by companies such as Metro Mile and Allstate and larger insurance companies jumping on the telematics game, trying to keep track of your driving usage and driving style, you could get savings here if you're driving a lot less than you originally anticipated. If you don't want to go out and shop for a completely new policy, you can also check with your existing carrier and your existing agent to see if they can modify the rate that you currently have by reducing your miles. That might save you some money based on the lower mileage. Now, while you're speaking with your insurance agent or going shopping for a new policy, also take into consideration the discounts and try to max out on your discounts. If you're a student, have any alumni associations, trade memberships, corporate discounts, look into any and all discounts that you can have at this time. It may be a good time to reevaluate your policies. If you've just been renewing it year over year, haven't been looking at it too much, might be the time to either go shop. Now is a great time for you to sit down with your agent, see what they can do for you, see what value they can bring to you as the policy holder. They should be able to walk you through what's going on, work with you to try to save you money or to meet any needs that you have. If you feel like your agent isn't doing this for you, this could also be a time to go shopping for a new agent. I'm sure a lot of agencies out there right now are looking for new customers and more than happy to help you out in a crisis such as this one. And a last smaller point, if you're considering doing any delivery services or driving on the side to earn some extra money, definitely don't cancel your policy without checking those requirements or talking to your agent first. A lot of businesses are hiring delivery drivers due to the increase in demand, but a lot of these companies aren't actually offering you coverage. And additionally, your personal auto policy may not cover commercial use of your car. This is the same for rideshare. If you're driving for Uber or Lyft, your personal auto policy may not cover you if you're using it for commercial use. And depending on the app you're using or the company you're working for, they will have different requirements in terms of your auto insurance. For example, DoorDash and Postmates only offer excess coverage in addition to your personal policy. So if you don't have a personal policy to begin with, they won't be able to provide you coverage in case of an accident. Other companies such as Grubhub just straight out don't provide any coverage at all. So be sure to look at their requirements and what they're offering and speak with your agents and see if it can meet your needs and make sure that you're covered. You don't want to go out there, try to drive delivery for some extra money and end up in an accident that can set you back even more. Now, I know this was a lot of information and these are pretty crazy times. Just a couple thoughts for you to think about your auto insurance and maybe use some of these things moving on into the future. Just to recap, for most people, I wouldn't recommend flat out canceling your insurance policy, even though it can save you hundreds of dollars a month. And you very well could save that 15% by shopping around or calling your agent. So look into that. But everyone's situation is different. So this is a great time to reach out to your agent or to reach out to your insurance carrier, see what they can do for you. If you thought this video was useful, please leave this a like, share it with your friends and family in these times. If you have any questions, leave them down below in the comment section. I'll read through what I can, answer what I can. But stay subscribed if you like the content, want to follow the channel. Thanks for your time. Thanks for watching. Peace.